Let's talk energy as David Williams, the investor and forecaster at Page Traders, joins us to help us with that. David, welcome. Good to have you with us this Friday. Before we get into the specific levels that you've got your eye on from a macro standpoint, looks as if crude, as we head into the end of the week, headed for a loss, seems to be driven by some of the demand concerns that are weighing on price.
Oh, good morning, Ben. Great to be here. Thanks so much. Yeah, you know, the crude oil market has really displayed a dramatic decline, and we have a number of fundamental factors behind that. We still have considerations such as the poor economic data coming out of China, which I think is the biggest consumer of crude oil, the continuing strength, which you just mentioned, in the U.S. dollar. Since the decline began, our forecast on your program has been that if crude oil can remain on monthly closes above $88, you know, we're very close to that now. If they can, that to us signals that the market's going to be back up. Crude oil, the futures market, will be back up, unbelievably maybe, at $118 to $119 in the fourth quarter of this year. Okay. And further, if I could just throw this in, we believe that August, this month, is the on-time month for a bottom on the monthly chart in crude oil. So that would mean that if you were looking at a monthly chart, you would see the month of August show the low, and then the market would start moving up.
You know, let me get this monthly chart up here so we can have a look. And as we just sort of, again, well, for one, take a note here of how we're kind of halfway in the middle of the range that's been established off the all-time spike highs we saw, again, up at 147, we'll call it, back in 2008, the summer of, and then we traded down to the pandemic lows here again in spring of 2020, and here we are right now around this 88 level. So this 88 level, it sounds like it's pretty pivotal in terms of the bigger picture.
It is, and we can allow a little bit lower than that, but I do want to see the monthly close for us in a kind of pristine way above $88. And listen, you know, traders have to know what would make their outlook incorrect. And in our particular case, if it does close below $88, we believe then it's likely that they will decline to $79 into the fourth quarter. So that's kind of really, it's the final leading edge, that $88 level for us, before we would probably get a break to the $79 level. You know,
even more so pivotal than it sounds like, again, if we close above it into the end of August here, it sounds like above 88, we're looking for 118, 119. Below it, we could be talking about 79 in the fourth quarter. Talk to us, David, because in addition to China, some of the concerns, which is really where we started the week off, now that I think of it, right? We woke up Sunday night, Monday morning into some of the retail sales disappointing data, the PBOC cutting rates, if you remember, and crude oil, the indices coming off. Now, the indices managed to shrug it off, as we've been talking about, with basically the backdrop being earnings and some of the better than expected data, rates, which have been in a bit of a range. But you mentioned the U.S. dollar, and it's starting to inch its way back up again. I mean, I'd imagine if you're trading crude, this is a factor to consider, back up to, well, just shy of, well, actually to 108 in the overnight session.
Yeah, you know, the U.S. dollar is very much tied to crude. One of the reasons for just the fundamental side is that when the dollar rallies, it makes it more expensive to buy crude for people that are using other currencies. And so it puts pressure on the crude market because it's just more expensive because the dollar has rallied. So in many cases, and I don't make a lot of super connections between these two markets, but there are connections between them. And if we do have crude reverse and we do close above 88, we start looking at the dollar probably being in a weaker position at that point.
You know, give me 1 second here, but I do have a chart to kind of support that narrative in terms of what we've been seeing this week. And I've got the dollar, which is on the left side of the screen here. I've got crude oil, which is on the right side of the screen. Give me 1 second here, because I just want to point out in terms of what we've been seeing here. Again, crude oil recently, oops, hold on 1 second. Let me get this into view here. Crude oil coming off again, that 95 level down to 85 as you got the dollar on the left, which is strengthened here some. You know, again, this week, it wasn't just, or last week, I should say, it seemed like the focus on the fundamentals here the last couple weeks now that I think of the EIA, OPEC, IEA ultimately. But, you know, as the dollar starts to work its way higher, maybe this will become a bigger factor here, Larry. I'm sorry, David, as we get into the, you know, potentially that 109 handle again, 110 area. I mean, I guess, obviously, some of the fundamentals may be more a consideration when you're talking about the supply to demand side. But if the dollar starts to work its way back into new highs for the year, that would, again, maybe kind of trump some of those other factors that we talk about.
Yeah, absolutely. And you make a good point, I think, that in most cases for us, we're purely technical. We talk about the fundamentals, but all of our forecasts are based on technicals. But really the best trading, and I think some of your listeners would agree with this, are when both fundamentals, like you say, in the last several weeks, the fundamentals have been very powerful, very strong, very considerable, and the technicals have been very important as well. So when you have both fundamental news coming and your technical indications are in play,
kind of an ideal situation.
Yes, you can do some really good trading.